Thank you, Anthony, for your kind words, and thank you, Eira, for joining us this afternoon.
It's a pleasure to be here. Thank you very much.
I guess we'll, since we're batting last year and trying to keep us on schedule and get to the fun part of today, I wanted to jump right into it and sort of get your opinion on the state of affairs in the diamond industry, in general, the mining industry. Considering your background, I figured you're probably one of the more qualified speakers today to give us a sort of overview of what's happening. What are you seeing? What are you feeling?
Yeah, I think the common theme that we've heard a little bit this afternoon and generally within the marketplace is that the mining sector is a little bit unloved right now, but I think we've got a lot to be optimistic about. The reality is there's huge demand for all sorts of mined commodities, whether or not it's metals and minerals going into new technologies, or it's the energy that we use in our everyday life, or when it comes to things like luxury products and diamonds. If you believe in world GDP growth, then you have to believe in diamonds. So I think I'm very optimistic. I think we've got a lot of opportunity in the space right now, and we have to get out there and convince a new investor base that this opportunity is one that they should be seizing today.
Excellent, I love it. That's exactly what I was thinking. Well, today we've heard a lot of doom and gloom, and you often hear this tone, these days in mining. So it's good to hear optimism and remind ourselves often of how vital the industry we're in, and the fundamentals do support that. Certainly a return of investors eventually. So patience is required. Tell us about Lucara. Exciting times.
Sure, yes, I'm very excited about where Lucara is going. We've come through a big year of transition for the company. We've come through kind of an evolution. We've been in production since 2012, so we're in year 7. We've got a great asset in a great jurisdiction. Our mine is located in Botswana, and we have become well known as one of the world's foremost producers of very large, high-value diamonds. And that has been a real advantage for Lucara as we start to think about where we want to go, strategically in the future. We have a product that is unique, it's well sought after, and it somewhat insulates us for some of the vagaries and volatility we see in the diamond market, particularly for small diamonds, which have been under some pressure in the last couple of years. So for Lucara, we're really focused on a couple of key things. One is we're in the middle of a feasibility study looking to expand our mine underground. That has the potential to extend our mine life out to 2036 and beyond. And then the second piece of our business strategy is focused on a new business that we acquired about a year ago, which we call Clara Diamond Solutions. And this is not a mining opportunity, but it is a diamond opportunity, and it is a new technology. It's a digital sales platform that has the potential to completely transform the diamond supply chain. So that represents a significant growth opportunity for our company as well. So those are our sort of 2 immediate focus areas, and we think this is a great time to be doing this.
Excellent. Congrats are in order. For just a couple of weeks ago, I believe I saw a press release about your recent discovery, the second largest uncut.
Yes.
That was amazing. Of course, the stock price reacted, and congrats. Do you want to talk about that?
Yeah, listen, we're really pleased. I mean, one of the, I think, big differentiators for Lucara as a company and as a strategy, really, has been to really invest and incorporate innovation and technology into our mine design and into our approach in general. And so we were the first diamond mining company to incorporate XRT, diamond recovery technology. George talked about it in his presentation today. It's something that they're obviously looking to incorporate as well for Star. And what's important about this technology is it has allowed us to recover these very large, high-value diamonds without damaging them. And of course, that's very important for value preservation. So our mine, in 4 years, has recovered two stones greater than 1,000 carats. The first one was the historic Lissetti Lorona, which weighed in at 1,109 carats. And it was purchased by Lawrence Graff in 2017. And he has recently finished polishing that, and that polished into a 302 carat modified princess cut diamond, which is the highest clarity, highest quality diamond ever to be certified by the GIA. And then most recently, the 1,758 carat, which topped the Lissetti that you just spoke about. Although this one doesn't look as pretty as the Lissetti, and we're the first to admit that. It does have some nice white components, so we're actually working now to analyze the stone and understand its full potential, but we think we've got at least a 400 carater within that, which will generate significant revenue for the company.
Awesome, congrats again.
Thank you.
This is obviously an example of technology paying off.
Absolutely.
The company adopting technology, and in recent times, certainly over the past 2 years, innovation and technology have certainly become buzzwords in mining as investors look for more from mining companies. You touched on Clara. Mm-hmm. I thought this was fascinating. I think it's probably one of the better examples I've seen of a mining company adopting technology aggressively as not only to help existing operations, but really taking it on as a potential, new revenue stream.
Yeah.
I know you're close to this project.
Yes. No, we're very excited about Clara. There's kind of two key aspects to Clara. One is around creating a more efficient marketplace. I mean, fundamentally, that's what it's about. The way we sell diamonds or transact diamonds hasn't changed in over 100 years. It's very inefficient. It's very inflexible. So Clara is positioned to change that. But the other piece is really around provenance. Consumers today really care about what they're consuming and where it comes from and how it was produced. And that's been a common theme, I think, in the presentations today. We've talked a lot about ESG and sustainability in general. And the diamond marketplace has been deliberately opaque for a very long time. And Clara has the ability now, and really one of its primary purposes is to bring transparency. So we are tagging diamonds as they're produced in real time at the mine sites, and we are able to then follow them through this technology enabled by blockchain right through the value chain, ultimately to the point of final retail sale to that consumer. So I think that's a really important aspect of what we're bringing to the market, and industry needs
cost efficiency.
Very much.
Well.
We can unlock, we believe, significant value. All of our test work has demonstrated an unlocking throughout the value chain, some to the producer, some to the manufacturer, of about 18 to 23% over what we are currently achieving throughout the supply chain. So it's a significant win from a cost perspective and a margin perspective. And then it also has this added advantage of giving assurance to the consumer.
What's the rollout timeline like for Clara?
Well, we're rolled out. So we acquired the business a year ago. We put it together with Lucara. That's when I took over as CEO. And we have been busy commercializing it, and we've now had 4 sales. We're ramping it up slowly. We have currently got 10 customers buying on Clara. These are the very large integrated jewelry and manufacturing houses around the world. And the feedback we're getting is overwhelmingly positive. So it is our intention before the end of the year to open up Clara to our fellow producers. And really for Lucara, that's a big part of our business strategy. Clara is a volume story. So we believe that our fellow producers will see the immediate benefits of selling on Clara. Not only will they realize higher prices for their diamonds, but they will be selling their diamonds basically in real time. Today, current producers only sell their diamonds either every 5 weeks, or in the case of Lucara, we sell our diamonds once a quarter because we're a relatively small producer. So there's a lot of benefits that come through selling on Clara.
Okay, excellent. Shifting gears a bit, Earlier we had Mark Bristow here, and we had a few companies and few CEOs talking about the M&A trend in mining.
Yeah.
And I know you've had experience in this. You were CEO of Caminac that was acquired by Goldcorp. And you've stated, actually, last year that M&A is a big part of your strategy going forward. I thought you could shed some light, on your M&A activity and, update as to what you're doing, what you can say anyway.
Sure.
As far as, and generally,
I can say nothing,
about
but
what's happening in this year.
No, I'm happy to talk about that a little bit.
Right.
Listen, I mean, my first, I've had a lot of M&A transactions over my career, including one hostile takeover many years ago that I vowed never to ever repeat. But I think
You were the target or the acquirer?
No, I was actually the acquirer, but it was such a long, drawn-out process. It took years off my life. So I first state that I have no interest in doing hostile takeovers. No, listen. I think there's a time and place for M&A, and M&A is notoriously difficult to do and create value for all the shareholders. So. I think we're coming to a point, certainly in the diamond sector, where this is a space that's very small, and it's been a difficult time for a lot of the junior producers in particular. And when Dominion got taken over by Washington Group, that was the sort of premier investable mid-tier company. So that I really think took a lot of energy out of the space, and that we're left with a bunch of junior companies now that are really not investable in terms of their size. So I think if there was ever a time, I think we're getting to that point where it does make sense to put these pieces together. But for Lucara, the challenge is we have a very high margin asset. We've got 2 growth projects in the pipeline that we're very excited about. And our immediate focus is on executing on those organic growth projects that we have in our portfolio. But of course, we're continuously looking. We think that, that is the prudent thing to be doing. And we do think that the sector generally does need some consolidation, and at some point, we believe that will happen.
Do you find that your investors are pushing or clamoring or asking for M&A activity, or what's this mood like from an investor side?
It's interesting for us because we are a dividend payer. We've been paying a dividend since 2014. We were the first diamond company to initiate a dividend policy, and we've paid out $256 million in dividends, which is far in excess of the money we invested to build our project. The dividend currently, yields 7%. We have cash on our balance sheet and no debt. So we've got investors that really own this story for that dividend, and they're very sensitive to that dividend. So including our chairman, who is the largest shareholder, who particularly likes his dividend. So I think the key message there for us is that, whatever we do, it has to be accretive. It has to make sense. It has to add obvious value to our company and for our shareholders.
Are you looking to, if you do, are you looking at, in terms of jurisdiction, are you looking at Canada? Are you looking at Botswana, wider Africa?
Yeah, listen, I think because it's such a small space, we really can't be too restrictive in our criteria. So I would say we look broadly, but of course we risk rank everything we look at on the basis of geological potential, political jurisdiction, overall geological quality, of course. So all of that gets factored into our analysis, but I wouldn't say that any jurisdiction is completely off limits for us. Obviously, we're more comfortable in jurisdictions like Botswana. That would be our first choice, but obviously Canada's not a bad choice either.
Certainly so. The diamond industry, the diamond sector, subsector, has last year got a bit of a shock, I guess, when De Beers announced their Lightbox project or Lightbox jewelry. It's tempting to see this as a negative event for miners. How do you see it? What's your...
You know what? I'm actually really excited about it. I think it was a very positive development for the industry. I think it clearly serves to differentiate the two markets. The synthetic diamond market is not the same as the natural diamond market, and they can coexist. Right now, synthetics account for 3 to 5% of global jewelry consumption, and that probably will grow somewhat, but we don't see that encroaching into the natural diamond market, particularly for purchases related to those important commemorative lifestyle life moments, rather. And the reality is that a synthetic diamond that you would have purchased maybe 5 years ago for, say, $5,000 would be worth less than $800 today, so less than a cell phone. So there's no store of value in a synthetic diamond. Rather, synthetic diamonds really are filling a niche around fashion jewelry, and we see it almost as an entry-level opportunity for consumers. And I think, for the women in the audience, they'll appreciate that, when you're a young girl aspiring to own, your first designer handbag, you're not going to be out, buying that until you probably have a few paychecks under your belt. But that doesn't mean that you don't aspire. So you may go off and buy that fake Gucci handbag on 42nd Street in New York. That doesn't mean it diminishes your appetite for the real thing when you have the opportunity to afford it. And another analogy I use is thinking about how we consume luxury products. I think everyone can appreciate that, as consumers, we have aspirations, and we may have that designer, whether it's a suit or that Chanel handbag sitting in our closets. But at the same time, we own Zara and we own The Gap. It's a continuum, and they're not mutually exclusive. So certainly that's how we see synthetics and natural diamonds kind of playing together in this market. And because of the fundamental challenge of and the cost of synthetics has come down so dramatically, those diamonds can never be resold for what they were purchased for. And I think De Beers is, clearly standing up and making a statement that this is the case.
Yes, I think that's a great analogy that you brought with retail luxury market. Very interesting. I wanted to quickly, before we wrap up, we're getting close to time, I wanted to ask you a little bit about the ESG movement. You started in mining over 20 years ago, so very, very young. But things at that time when you started, the focus was not very high on stuff like diversity and ESG in general. So I wanted to sort of get your perspective and what are you feeling in terms of changes that you've seen from the time that you started as a geologist in exploration and mining. What are you optimistic about that next generation of leaders, as the panel spoke about earlier?
I'm very optimistic. I think we have to be, a little bit patient, but I also share the frustration that it hasn't happened quick enough. I think, but there was a couple of comments on the previous panel. What we've seen is that diverse companies are generally more profitable companies, are more successful companies. So I think that is becoming very apparent. And for us at Lucara, we're very proud of the fact we're actually 80% women in our senior leadership team. We have
founded by quite a number of women.
Yes, and 2 partners in the original founders. Catherine McLeod is also a founder of Lucara. And something we're also very proud of is the fact that we have the first female Botswana woman running our diamond company in Botswana. And she's the first female leader to run a mining company in Botswana, period. And so that's something we're certainly very proud of. And we're also proud of the fact that, 98% of our employees are Botswanan. We have no expats in our leadership team in Botswana at all. So this is something that we have embraced as an opportunity, and it's clearly paying off for us. We just reported our Q1 results. The mine has never been stronger. We're actually hitting record production through the plant, and this is the best production quarter we've had in 7 years of running this operation. We are exceeding guidance with, ore and carats produced, and we're doing it safely. We've just recorded our second full year without a lost time incident at our mine. So all of these things contribute to better performance, and I think Lucara is a really good example of that. And so we see the benefits. We continue to push forward and on that basis, and for us, it's a no-brainer.
Excellent. No, congratulations. I've noticed that your diversity program and your ESG program in general is quite impressive. Before we wrap up, I wanted to give you the last word. Do you have anything you want investors to take away?
Well, listen, I think back to the way we opened this, which is, how do we feel about this space right now? I think there is this sort of sense of not quite doom and gloom, but certainly this feeling that this is a sector that's unloved, and I agree with that. But I think we've got to turn that energy around. As leaders in the industry and as companies, I think we've got a great story to tell. We've got to get out there and tell the story, and we've got to do it to a broader audience than kind of our tendency is to sort of preach to ourselves and the converted. And I think that's a huge opportunity. Canada has got a great story to tell. The mining industry in Canada has a great story to tell, and we need to get on with that.
Thank you.
Thank you very much.
Thank you, Eira.